Good morning, everybody. Welcome to day 4 of 5 of the 40th annual Eide Bailly Bank Seminar. At this time, I want to recognize our partners and associates of Eide Bailly who support this event. Thank you for all your service you provide to our firm and to our clients. My name is Gary Smith, and I'm the partner in charge of our Financial Institutions Service Group. Our motto for this year is Uncharted, leading the way to the next normal. And we're excited to have our distinguished speakers join us today. Senator Kevin Cramer, who serves on the Senate Banking Committee, is joining us this morning to give us a political outlook after yesterday's election. After Senator Cramer's address, we will hear from Casey Matthews, Chartered Financial Analyst and Executive Vice President at UMB Bank from Kansas City, Missouri. To view the schedule for today's speaker bios and presentations, click on the link that was provided to you in this morning's reminder email, and we'll include the link in the chat feature of today's virtual event. You can also email us at fi@eidebailly.com or contact us at eidebailly.com/fi if you need assistance. Before we start our program, I would like to send a special thank you out to Cheryl Knutson and Amy DeGeorge, who has spent considerable amount of time planning and organizing this event. Now for our keynote address for today. Senator Cramer was elected to the United States Senate on November 6, 2018, after serving 3 terms as North Dakota's at-large member of the United States House of Representatives. He is the first Republican to hold this Senate seat in his lifetime. He serves on the Armed Services, Environment and Public Works, Veteran Affairs, Banking, House and Urban Affairs, and Budget Committees. Senator Cramer has had a distinguished career in public service. In 2003, then Governor John Hoeven appointed Senator Cramer to the Public Service Commission, and in 2004, he was elected to the position. As a North Dakota Public Service Commissioner, Senator Cramer helped oversee the most dynamic economy in the nation. He worked to ensure North Dakotans enjoyed some of the lowest utility rates in the United States, enhancing their competitive position in the global marketplace. An energy policy expert, Senator Cramer understands America's energy security is integral to the national and economic security. As a strong advocate for the free market system, Senator Cramer has proven record for cutting and balancing budgets, encouraging the private sector through limited, common sense regulations and limited government. Senator Cramer has a Bachelor of Arts degree from Concordia College in Moorhead, Minnesota, a master's degree in management from the University of Mary in Bismarck, North Dakota, and was conferred the degree of Doctor of Leadership by the University of Mary on May 4th, 2013. It is my honor to welcome to our 40th annual Bankers Seminar, Senator Kevin Cramer from the great state of North Dakota.
Wow, thanks a lot, Gary, for that. That was a very generous introduction. What do you guys want to talk about? I mean, there's nothing going on or anything. We could probably come up with a couple of things. It's really funny. I was as I was thinking about this when I accepted this invitation to deliver an address the day after the election to a bunch of people who are a lot smarter than me about the topic they probably want me to talk about. Of course I said yes. I always say yes. But I think back then, as I started thinking about the topics, I had no idea we'd be sitting here today with a presidential election still hanging in the balance and all the other things going on. And yet I would say this. One thing I knew for sure when I took the assignment was that whatever happened on election day or election week or election month or whatever it's going to be, God would still be on his throne. And as it turns out, he is. The pollsters are all looking for a new career now. The Senate is the firewall. The Sherrod Brown will not be chairman of the banking committee. So there are some really good things to take away, even not knowing how the presidential thing's turning out. It's interesting. This last week when I was thinking about this, when Elizabeth Warren led a group of Democratic senators in a working group and announced their plan to reform capitalism should the election go the way they were hoping it would go. And of course, who ever dreamt that we'd one day have a major political party whose main goal was, to, as they put it, reform capitalism. That's a nice way of putting it. And yet here we are. Fortunately, that's not going to happen. But nonetheless, we still have a major political party with a pretty good part of its base committed to socialism. So we have plenty of things to work on, but there's lots of good things to talk about, and I want to get into some of them. I know you're going to want to talk about the election. I'll want to talk about the election. I'm sure you may have some questions. I don't know. Your sources are the same sources as I have. MSNBC, Fox News. Actually, I pretty much confine my news to Fox Business, Bloomberg TV, and CNBC. But on a day like today, I might make some exceptions. But one of the things that I really, felt confident about a month ago, and I still do, and I think will a month from now, and that is that those fundamentals of our country are still here. And I think regardless of what happens, even with legal challenges and whatnot, because there no doubt are going to be some, I think it's pretty clear, pretty obvious, and probably should be. But our entire system that includes the three co-equal branches, the two, the bicameral Congress was genius, and it was designed to get us through crisis. And we've gotten as a country through lots of crises, and we'll get through this electoral one, again, depending on how messy it gets. In the greatest experiment in political history, the history of the world, is self-governance. And we're still the best at it. We're really the only ones that do self-governance in the truest sense of the word. There are other democracies, as you know. Most of them elect parliament, and parliaments, elect, prime ministers. They sometimes don't have an independent judiciary, or if they do, it's not as independent as ours. All of those things that our founders put in place make sure that we get through things like hanging chads and unsolicited mail-in voting and the things that we've experienced in this country and will continue to experience. So I remain confident. Now, with regard to my role on the banking committee, and by the way, if somebody would have told me, even 2 years ago, frankly, that I would be on the United States Senate Banking Committee, I'd have said, yeah, right. No chance. 2 years ago, I wasn't even thinking I was going to, by that point, I was pretty sure I was going to be in the Senate, but I darn sure didn't think I'd be on the Banking Committee. I thought it was about as likely as Sonny Bono getting appointed to the Judiciary Committee in the House of Representatives, but he did. So, who knows? Anything's possible. But I will tell you, and I think it's sort of instructive. I've done a number of banking seminars, as you guys probably know, webinars, particularly pre-CARES Act. I did two pretty large ones as we were working on the Paycheck Protection Program, and trying to. And I'll talk a little bit about my role in some of the PPP stuff and the banking regulations that I was able to get in, at least temporarily, regulatory reforms temporarily, if for no other reason, just to get us through this pandemic crisis. And if by some chance, maybe it becomes an experiment that demonstrates that, an 8% leverage ratio really does make more sense than 9%, or that CECL really wasn't that great of an idea for everybody. But I would never believe I was going to be in a situation to do those kinds of things, because quite honestly, I don't know a lot about banking. It's not my area. It's not my area of expertise, certainly not my area of education. Although getting a master's degree, I learned enough probably to get by. But when I went to see Mitch McConnell during the orientation week in middle of November of 2018, he said, we talked about committee assignments. I want to talk about environment, public works, and armed services, veterans affairs, the things I was really interested in. And I did say, my bankers would kind of like me to be on the banking committee because, of course, my predecessor was on the banking committee. And he said, oh, no freshman ever get on the banking committee. Everybody wants to be on the banking committee. We can't, just get that out of your head. What else would you like, if you get a third committee? And so I dismissed it, went on to commerce or something. And then in December, I get a phone call from Chairman Cramer, who's also on the steering committee. And that steering committee is made up of Chairman Cramer and Mike Lee, and then, of course, Mitch McConnell. But Mitch McConnell has all the votes. So Cramer calls and says, hey, I just want to tell you about your committee assignments. We, decided to give you your top two, requests, and your third one on Veterans Affairs. And he said, I was wondering if you'd be willing to serve on the banking committee. And I thought, well, this Senate thing's cool, and I served on one committee in the House, although it was a great committee in Energy and Commerce. But I said, yeah, this is great. And they said, oh, by the way, would you also be willing to serve on the Budget Committee? I thought, well, that's just penance for being on the Banking Committee. But here I am, and I've enjoyed it immensely. But I will tell you, as we were working on PPP, one of the things I've always believed strongly, and I think it's one of the strengths of our self-governed system, is you can either be really smart and be successful, I suppose, in Congress, or you can be really resourceful. So I lean heavily on resourcefulness. The nice thing is, prior to being in elected office in North Dakota, before I went on the Public Service Commission, I served in Ed Schaefer's cabinet for 8 years, 4 years as the tourism director, still the most fun you can have at work, and 4 years as the director of economic development and finance. And at the time, I'm sure a lot of you probably know Chuck Stroup. He was the economic development director the first 4 years when I was tourism director. And of course, he's a banker, a bank president. And he knew a lot about finance, and I didn't. But working with him and others, I was the promoter in the group. I was the tourism guy. Well, when the economic development job came open, Governor Schaefer called me over to his office and said, I want to promote you to economic development director. And first thing I thought is I didn't know that was a promotion. But it does pay about twice as much, so I suppose. And then I said, but you do know I don't know anything about banking. You could tap it into a small thimble. And he said, that's okay. We've got that part of it, straightened out. Now we need a promoter. And so there I was. And because of that experience, that's what Mike Crapo saw on my biography. And that's why he asked if I'd be willing to take this position on the Banking Committee. So I accepted his invitation. Of course, I was glad to do it. My bankers have been very grateful for it. But to my point about resourcefulness, one of the things I loved about the House of Representatives, and one of the things for those of you who aren't from the Dakotas or one of the states that only has one member of the House of Representatives, the House of Representatives, when you're a statewide member of Congress and you've got 434 colleagues from somewhere else, but you're expected to carry sort of a statewide portfolio, you really do rely heavily on your stakeholders. And I did. And I still do. And that's carried over into the Senate job. Obviously, it's the same stakeholders. And so when I've done these webinars, particularly through the Bank of North Dakota and our lending organizations, all of them, credit unions included, independent community banks, North Dakota bankers, even Farm Credit Services, I've learned as much or more than I've ever been able to share. So don't be surprised if during Q&A I ask some questions. But the main thing is I try to keep my ear to the ground and try to respond to what people are asking. So the place on the Banking Committee where I've sort of hung out, if you will, where I've made my sort of stake my claim is regarding mostly smaller banks, mostly trying to help provide tools to provide relief from regulation, whether through the administration or through legislation. I've had a very good partner on the committee, the other freshman on the Banking Committee from Arizona over on the Democratic side, Kirsten Sinema. Her and I were classmates in the House and now classmates in the Senate. And we sit at the kids' table, as I like to say, and we work very closely on a number of things, including the extension of the Export-Import Bank, as well as some of the, like I said, community bank leverage ratio issues and some of the tax credit issues, PPP, small business forgiveness. I've also found a very good partner on the Democratic side in Senator Menendez. So a lot of times you'll see the three of us on the same bills, along with Tom Tillis, interestingly, and we work very closely together. We have similar constituencies, particularly rural constituencies and stakeholders. And so that's sort of where I've hung out on the committee. But again, and I've got a great staffer in Jason Sturak, who does a really good job for me working on the banking issues and finance issues. But Jason, like me, relies heavily on our lending institutions and stakeholder groups, as well as borrower groups, to better understand both the technical details and the nuance of lending and borrowing and investing, and particularly, like I said, on the regulatory front. But I love your theme of leading leading the way to the next normal. I kind of reject the whole notion of a new normal. I like normal. It's normal for a reason. Normal implies consistency. I always say to my friends, in fact, I just had quite a little exchange this morning with the New York Times reporter. She'll go nameless for now, but just, you people aren't curious enough about enough things. And out here in Normalville, as I like to say, we are curious about everything. We're well-traveled. We're sophisticated. We understand global markets. We grow more food than we can eat in this country. We've provide a lot more energy than we can consume in this country, even on this continent. And so we're very global people. And I think new normal scares me a little bit. I like normal. I like steady normal. But that said, things are different. I mean, here we are having the 40th annual, meeting or series for Eide Bailly, and we're doing it on Zoom. I'm not sure that the airlines will ever recover their business travel. I know I've learned to do a lot of things differently. I do 2 or 3 national television shows a week, usually on the business channels, Fox Business, CNBC, Bloomberg TV, a little bit on some of the others as well. But, I never have to go into a TV studio again. And I used to run around down to Prairie Public Television or over to Gray TV here in Bismarck, or to the studios in the Capitol. Now I just stay in my office, and we've learned how to do things differently. So there's no question there's going to be a new normal and a next normal, and you guys are the perfect people to help lead us to it. I want to take just a little bit of time to talk about the pandemic that we're in, and the CARES Act, which, as I said earlier, we're part of it. I mean, when you look at the political strife right now, it's hard to imagine that we passed a $2 trillion COVID relief package, a stimulus bill, if you will, unanimously in the House, unanimously in the Senate. Just a few months ago, we did that. Now, $2 trillion was stretching the edges for pretty much, I don't know, 3/4 of the Republicans probably in Congress, but we knew we had to do something. We didn't know necessarily what it was. We knew that we had certain targets. We knew we had to combat the virus. We knew we had to provide support for frontline workers. We knew that local communities were going to be strapped. We knew healthcare needed lots of help. And we knew that a lot of people were unemployed and probably going to remain unemployed and needed some supplement to their unemployment insurance benefits. But we also wanted to make sure that small businesses had access to fairly benevolent capital in a way that would allow them to maintain their workforce rather than have their workforce become part of the unemployment force. And so we passed PPP, and I was laser focused on certain parts of it. And one of them that I was focused on were some of the banking regulations. I know that you're interested in things like, in fact, I tried to use that must pass legislation to make permanent relief for CECL, and to get that 9%, what I think is just sort of I don't want to call it an arbitrary number, but it was the easy number between 8 and 10 that the bureaucrats chose when they were committed to some leverage ratio for our community banks, and I think they missed the mark by one. So I tried to do some of those things in CARES Act, was successful on the temporary basis on the ones that I've talked about. Like I said, it could serve as an experiment, and at the very least, some temporary relief, while we were asking both borrowers and lenders to do things that they weren't necessarily comfortable with. And this is why today, as it relates to PPP, I'm so committed to finding a path, finding a way, and I'm hoping it'll be sometime during the lame duck when we get another package done, now that the pressure valve is partially released, that we'll find a better path to forgiving the vast majority of those PPP loans in a way that's efficient, that's not punitive, because that was the intent. Congress's intent when we passed PPP was for small businesses to be able to keep people on their payroll rather than the unemployment rolls, as I said, and that they would be forgiven largely for it if the loan would be forgiven if they use the funds in that way, as well as some of the other fixed costs. And the bankers are all more familiar than I am with it. But I knew that if we left it to the bureaucracy, that they weren't prepared to deal with it. If the rules and the regulations were going to be on the backs of the SBA and the Treasury Department, they didn't have, first of all, they don't have the workforce to do it. And I don't think that they're as connected as they probably would need to be. And so, sure enough, the forms that they were coming up with, the requirements they were coming up with, we estimated based on the first blush, the first attempt at forgiveness documents, it would cost an extra $2,000 per loan for the borrowers, and an extra $500 per loan for the lenders, and that's on over 4 million loans. So I said, let's just find a much simpler way. Let's find a threshold that looks right and deals with the vast majority of the loans, but less of the money. And let's just get those out of the way. So that's how we came up with our Paycheck Protection Small Business Forgiveness Act that I introduced with Bob Menendez and Tom Tillis and Kirsten Sinema. We authored the bill and sought Democratic and Republican co-sponsors, ended up with 31, as a matter of fact, in the Senate. And what that does is it takes loans at $150,000 or less, which makes up, by the way, 86% of the loans in PPP, but only 27% of the money of the revenue. So 86%, and we created a one-page attestation form that basically states, I spent the money the way it was supposed to be spent. And we know already that about 75% of those did. We knew that before we even introduced the bill. So you're talking about $132 billion on that was at stake here with the 86% of the loans, and yet we could, with one page, save lots and lots of money for the borrowers and the lenders, and a lot of bureaucracy, by the way, because it takes a lot of bureaucracy to go through all of those loans. Now, the other thing we did with that that's really important, and the reason I'm talking about it is because I need your help in getting it done. We need to keep the pressure on our leadership, and they're getting the message, believe me. But the other thing it did was it removed the burden, if you will, from the bank, the institution, and puts it on the borrower to make sure that they're not lying in their attestation. And that's where, that burden belongs, in my view. So I think we've got a really good bill. 31 senators think we've got a really good bill. 250 plus organizations, small business organizations, Main Street organizations, associations of all types, as well as all of the lending institutions are supportive of the bill. But we just want to keep it front and center as we go now into this lame duck. I know you guys have had some questions and thoughts, no doubt, about the Main Street Lending Program. As you know, that was a program that we put a lot of money into, trying to leverage the Fed, and it hasn't performed very well. There are some barriers to it. I think for obvious reasons. Probably the most obvious reason is it's not benevolent enough. It's not even as good a deal as you can get in the private markets, but it does provide a backstop, and that's not unimportant. I think a lot of people think, sort of like in North Dakota, we like to talk about the nuclear deterrent. We have two of the three legs of the nuclear deterrent in the B-52 bombers. I just took a ride last week in one, as a matter of fact, and the Minuteman missiles, and a lot of times my liberal friends will say, well, we've never used those nuclear weapons. Why do we have to have them? And I always say, because we never have to use them, because we have them. It's a little bit like programs like Main Street Lending, where we're trying to leverage Fed liquidity and tools. It helps keep the private money down, probably, and so it does serve that purpose without spending a lot of the taxpayer dollars. But that said, we've still urged the Fed and the others and Treasury to come up with better rules, make it a little easier to access, bring the caps down a little bit, the minimums down, and they've done a lot of those things, as you probably know. And I don't need to go through all those details with you. You're probably as familiar with it as I am. But we continue to try to influence the availability of capital. I don't think we can ask for the Federal Reserve to do any more. I think Jay Powell's been pretty good about that. One thing, President Trump and I don't argue about many things, but one thing that we've argued a fair bit about is the job that the Fed has done with keeping interest rates low. He, of course, believes they should be lower. Has always thought they should be lower. He's been very hard on Chairman Powell. I've always defended him, and as I said to the president, when the Federal Reserve was able to have some room to lower interest rates, provide more liquidity, I said to him, "Aren't you glad he's had that room to do that with? Because had he been where Germany was, he wouldn't have had that room to make the adjustments to spur on our economy." So, you guys, I don't know what's going to happen next with CARES Act stuff. I'm happy to visit with you more about it. I think we still, like I said earlier, we still have work to do on the regulatory side. I talked a lot to the regulators, probably more to the regulators than to anybody, because it's not enough just to have good regulations. We need to, and I'm not saying we do, by the way, but it's not enough to just have good regulations, because the regulators matter as well. And that's why when we look at what's going on in this presidential race, who the president is matters a great deal. Like I said, the Senate's the firewall. It's looking like we're going to maintain a Republican majority, and like I said, Sherrod Brown won't be the banking committee chairman, but we have real issues. And if you have a flip in the administration, and say you have a Treasury Secretary named Elizabeth Warren as opposed to Stephen Mnuchin, you've got a very different situation. Not to mention CCO and FDIC and all of the others. So. That's where if we are able to maintain the majority, if Donald Trump does get 4 more years, and it's all possible. The latest is that Arizona still may very well end up going Republican. Pennsylvania and Michigan the same, but there's a lot of things happening pretty fast. But if that happens, then of course we'll be able to use our Senate majority to confirm the right people. If it doesn't happen and Joe Biden becomes the president, then we have to use our Senate majority to make sure the wrong people don't get in. That's the point of the firewall. That's the point of 3 co-equal branches. That's the point of advise and consent. It's why our founders knew that we couldn't consolidate all of the power in one branch of the government. And of course, the one branch is one person. And so, again, this is where we'll be leaning on you guys for advice and counsel to make sure that we cooperate in a meaningful way with our president, whoever that person is, but that we don't shirk our responsibility to make sure that the right people get into the right positions. I'm sure many of you probably have some questions that you might want to ask. Some of them might be about politics. Some of them might be about banking or our auditing. Hopefully not too much about auditing. Please don't ask me about polling. It is a dead science. I believe it is over. I always like my pollsters, but I've never had much faith in the public ones, and I don't know why any television network would ever pay one again. So, if it's okay, Gary, with that, I'm happy to just field whatever questions you might have.
All right, Senator. I think we have our first question. Really is probably based more up maybe in the upper Midwest through the middle part of the United States. So the farm and ranch economy has been in a 7-year recession, and the COVID-19 pandemic exposed serious flaws in our animal agricultural supply chain. Many of our banks have ranch customers who cannot sell their animals or have them processed. What is being done to ensure that the supply chain is stronger in the future and to keep our farm and ranch customers going through this recession and pandemic?
Well, that's a great question, because one of the very first things that the pandemic revealed were a lot of the vulnerabilities in several supply chains. But certainly protein was one of the main ones. And but so, of course, were pharmaceuticals, so was PPEs, so was energy, by the way. I never knew I'd be on a first name basis with the royal family of the Kingdom of Saudi Arabia, but we are very familiar with each other now. But with regard to the ranchers, that one shown itself pretty early on. What's interesting about this, I actually think this presents an opportunity, because many times we sort of, we deal with whatever crisis is in front of us. And for a lot of our ranchers, they could see a crisis coming for a long time. And when you're down to 3 or 4 major packers, and in the case of beef, there are 4 major packers that make up over 80% of the capacity in the United States. 2 of them are foreign owned. One of them by China. The other one, Brazil, JBS, who, by the way, as you probably maybe have noticed, JBS has got themselves into a lot of hot water with our Justice Department. And so, when you see that kind of a concentration, it presents the potential for lots of problems. And when you have concentration, like I said, with two companies being foreign companies and neither one of them all that friendly, you have an even bigger problem. So you're right. It's especially a challenge for us up in the upper Midwest because we're the farthest from the plants. So when there's a fire in the plant in Kansas City, or there's a pandemic breaks out in Sioux Falls, our ranchers feel it particularly tough. Now, we've got lots of things that surround this. It's not just the packers and their concentration and whether there's price fixing going on. We know that after the fire in Kansas City, USDA did an investigation properly and appropriately, and still going on. But I did lead a couple of letters, in fact, but led one to the Department of Justice asking them to look into the possibility of some shenanigans. They are, and we know they are. Even though one of the problems, you guys, when you go to the Justice Department and they start an investigation, that's the last you'll ever hear about it until somebody goes to jail, pretty much, until there's some sort of an indictment, because they can't talk to you anymore about it. But we do hear from our sales barns and whatnot that they've been getting calls from FBI agents and being interviewed. So we know that there's some stuff going on. But I think the bigger challenge is this. As you can tell, I'm not a regulatory guy. In fact, I generally look for less regulation and freer markets. I do think when you're dealing with bad actors from other countries, you have to be diligent. And I think Donald Trump has certainly taught us that. But I like to just find ways, rather than to block the big guys, is ways to incentivize others. And North Dakota is pretty blessed. We have our state inspection services are recognized by the federal inspectors. We're allowed to, even with our smaller facilities here, we're allowed to sell across state lines. I'm on legislation to allow that nationwide, as well as some other things that are more localized and customized. I want to find more ways to knock down the barriers to entry. There are other things we can do, I think, with transparency in the marketplace. There's some bills. I'm not on them yet. I've been watching them real closely. There's a 5014 bill that Chuck Grassley has. Mike Rounds is on that bill. John Hoven's on that bill. It requires 50% of the beef market to be in the public market rather than forward selling. And I don't like to limit the ranchers' options, but at the same time, I do think price discovery in a market like this is pretty important. So there's a lot of things we're working on and dabbling in, but I'm going to go back to the fundamental point. The pandemic did reveal the problem in a way that I think a lot of people didn't notice before. It was there, but this revealed it. And maybe one of the good outcomes is that we find some solutions to some of this.
All right, Senator, we got the questions. They're rolling in now. So, So not including tax policy, what do you believe is the most significant policy difference between the Democrats and the Republicans that could have the biggest impact on small businesses, depending on who is in control?
Yeah, great question. So you said other than tax policy, but I would throw tax policy in this, and that's basically regulatory policy in general. And whether it's environmental policy, whether it's money policy, anything that adds to the cost of doing business is obviously a disincentive. And it also, by the way, it limits it diminishes our productivity, it diminishes our efficiency, it diminishes our global competitiveness. And one of the things that Donald Trump has done better than really any president, certainly in my lifetime, is he's knocked down a lot of those. And this is why the courts have become so important, Gary, because the courts have been the only backstop, frankly, for a long time. Whether it's some of the banking regulations or Clean Water Act, Clean Air Act, the New Source Performance Review, Waters of the United States, the Clean Power Plan. These are the big ones, but there are dozens and hundreds of smaller ones, including litigation. The state of North Dakota is engaging with other federal agencies, and we're just one little example, and I see it all over the place. That's that fundamental issue, and it's the reason I tie it to tax policy, because it's similar. There's nothing more regulatory than tax policy. I mean, our main differences a lot of times have to do with regulation, not just rates. And so I'd say that's the biggest one. And then the other areas that's going to come up now, of course, and it's one of those normal cycles, is is defense policy, national defense policy. And, I always say the reason we have Democratic presidents from time to time is because Republican presidents have rebuilt our military and everybody feels safe again. And then one of the main reasons we have Republican presidents from time to time is because Democratic presidents have, lowered the military spending to the point where it's diminished, and we have to elect a Republican to rebuild it. So I think that's another area where there's some pretty major differences.
Hey, Senator, real quick, just to follow up on that, and you mentioned tax, policy. Let's say you do end up with a Biden administration. What do you believe the chances are that you would see a change in the corporate tax rate?
Yeah, I think highly unlikely. Highly unlikely, as long as there's a Republican Senate firewall. And by the way, this is one of the reasons that our system of self-governance is so resilient. It's why I don't. Listen, I've been praying, for a Donald Trump victory. I really want him to win. I love him on a personal level. I like him as president, but I really, really, really like his policies. But I also know that if he doesn't win, we're still the United States of America. We're going to be okay. And this is one of the reasons, because both our founders trusted our people, and our people, occasionally they'll give a unified government to one party, but generally speaking, they like the checks and balances. They don't like to watch us fight so openly, but by and large, they like the checks and balance.
All right, Senator, the next question, you get to play Monday morning quarterback. So knowing what you know now, what is the one thing you believe could have been done differently immediately from the start of the pandemic?
I think Carson Wentz should have played for the Vikings. Then they'd be that much better. So, no.
I know you're a Packers fan, so I don't think you want to play for the Vikings.
No. So the one thing, so that's a great question. It's funny you ask it, because I think about it actually a lot. And every time you have a 2020 lens, you can think of things you might have done differently. I think, again, I'm not blaming anybody for doing what they did, because when you don't know much, you have to take the most conservative route, or perhaps the most extreme route. I think that's sort of natural, especially when you're dealing with a pandemic and you don't really know how deadly it is, how close we are to treatments, or if there are going to be all those things. So knowing what we know now, I think one of the things that I would urge any president is, you can't shut down the entire economy and expect you're gonna be okay at the other end of it. If you lock everybody up in their houses, in fact, if you want, I suppose you could just print a whole bunch more trillions of dollars and just make sure everybody's taken care of and lock them all in their basements. But that's got a pretty severe consequence as well. And so I would say go much, much slower on the lockdowns, and just try to keep as much business operating as possible with, operating in a safe manner. But to do that, you have to know all the things we know today, like how to do rapid testing, how to, how effective masks are, how good we are at Zoom, a lot of those kinds of things. And also to know how the disease spreads, how it affects younger people, who are the most vulnerable populations, what can you do to protect them specifically. But I would say, do not throw out the entire economy because of information on just the virus itself.
Senator, along those lines, you talked a lot about energy independence, and we're getting some questions on, because a lot of the bankers that are on the call today are basically in areas that are very dependent on oil and gas. And what do you think the long-term outlook is for oil, gas, and coal industries, and how substantial are our natural resources reserves, and what are alternatives should we be looking at for the long term? And that's really the question coming in.
Yeah, no, it's a great question, because as I talked about earlier with regard to food policy, I mean, we saw how vulnerable that is. In fact, I remember Governor Sinner, for those of you who remember Governor George Sinner, the last Democratic governor we had in North Dakota, he used to always say there's two things any sophisticated country will protect if they have them: food and energy. And he's exactly right, because even if you lose all your global markets, as long as you can feed yourselves and you can, keep your communities warm and safe, you're going to be okay. And you're going to do everything you can to protect that. So that's why we have the food policies we have. And it's why we need to protect energy policies. I think with regard to the future of energy, and bankers are going to play a really important role in this, and you do, as you know, I have fought with the biggest bankers in America over their portfolios and their policies, their particularly their environmental and social governance policies, and the use of proxies and all of the ways that the left manipulates lending policy. So I do think that there's real viability in the future. And one of the problems is for fossils, but one of the problems we have is that the playing field has been tilted so against fossil fuels that the innovators who are finding the solutions, whether it's clean coal technologies, if it's Operation Tundra out here in North Dakota, that's carbon capture, utilization, storage of CO2, literally, it ultimately would be CO2 zero emissions, coal-fired power plants. The use of hydraulic fracturing in a modern way is so efficient and so much more environmentally friendly. In fact, to the point where the United States of America, even without being in the Paris Accord, has lowered our CO2 emissions the last several years more than any country. We're also the biggest consumers. So what I worry about is that if we take extreme measures and tilt the playing field so strongly toward renewables, as an example, you're going to end up with what we have in California, a very unreliable grid on the hottest days of the year when the winds don't blow, no electricity to cool down your home. Or in the Midwest, you end up with polar vortex, and you have a grid that doesn't have enough electricity on it, because guess what happens when it's 40 below? The wind doesn't blow. And when you need it the most, it's not there. And then you have cloudy days, all those things. I just think we need a much more comprehensive energy policy. And I think the best way to do that is eliminate, you heard during the presidential fight, one candidate's going to ban fracking, and then no, he's not. I'm for fracking. I'm just against oil. I mean, it was the most outlandish thing I'd ever heard. But anyway, I'd just soon get rid of all the incentives for all. When you have a competitive market, the last thing you need to do is pick winners and losers with government policy. Now, I don't think you should punish people who made investments based on previous government policy. I think if you have billions of dollars worth of ethanol plants built on the promise that there'd be an RFS, you ought to try to find a way to not punish the people that made those investments. But you certainly ought not to continue to have policies that encourage more investments when it's not necessary. Investments that were made at a time based on policy that was made at a time of energy scarcity, when now we have this incredible energy abundance. But here's the thing, and this is an area where I part company with a lot of my conservative friends, and I definitely do with the president. To the point where in his first couple of years, his son-in-law and daughter and I and Rex Tillerson were over here, and people like Rick Perry and some others were on the other side with the president. And that was getting out of the Paris Accord. I think there are certain things about 3 weeks after he was elected, Donald Trump called me up to the Trump Tower, and he said, "What do you think about? Do you believe in global warming?" I said, "Doesn't matter." Well, he says, I think I just don't think it can be that as extreme. I don't think we're as responsible as they say. He said, "It doesn't matter." The world's concerned about it. Our people are concerned about it. So what we need to do is be the solution. Don't kill the innovators. Let's keep the innovators alive. You can't get clean coal technology if you kill all the coal companies. You can't, by the way, have a bridge to complete renewables without natural gas. And I'm not sure you want to, but you also can't have a reliable grid if you kill all of the gas, all of the coal, all of the nuclear, and just rely on intermittent supplies. We have to have that discussion. But I say, here's the thing. Not only can we get to the point where we're a net exporter of natural gas and oil and maybe even clean coal, we can be a net exporter of our intellectual properties, of our technologies, and no one will do it better than the United States of America. So I think there's still a bright future for a lot of these. And I think part of it's going to be driven by the crisis of things like polar vortexes and blackouts and places like California when you need that energy the most.
All right, Senator, our next question, I think, is probably near and dear to all the North Dakota bankers, is one of the great tools that the North Dakota community bankers have is the Bank of North Dakota, the only state-owned bank in the United States. And there's been some legislation in some other states to maybe model after the Bank of North Dakota. Maybe if you could just give your thoughts, as to some of the things that Bank of North Dakota has done for the bankers in North Dakota, plus maybe some of the challenges that those states that are looking to emulate the model of Bank of North Dakota might have facing them as they look to a public bank.
So no offense to the non-North Dakotans, but the biggest problem that some of these other places have, and California is one of them, I think they're looking at allowing communities to have, public banks, is that they might not be able to find a North Dakotan willing to move there and work. Because remember I said earlier about regulations are one thing, but regulators are another, and that's for good or for bad. The Bank of North Dakota, first of all, was, as you know, in its history, it was created to combat the big banks in Minneapolis, just like the mill and elevator was to combat the big millers in Minneapolis. And this is back to our discussion earlier about protecting our supplies of essential products like commodities like energy and food. We find ways to do it, particularly at a time when transportation wasn't as easy as it was, and access to markets wasn't as easy as it is today. So the Bank of North Dakota comes along, and the genius of the Bank of North Dakota is it doesn't compete with banks. What it does is it facilitates deals in a way that many unbankable deals become bankable, and it also pays for itself and then some. It provides a lot of revenue for our state budget. Through its profits. The Bank of North Dakota, it doesn't just facilitate loans, by the way. It facilitates everything out here in terms of banking. I said earlier, I might have mentioned up front, when I was doing these webinars for PPP prior to passing it, seeking input on what it should look like. I did one with 400 North Dakota bankers that was facilitated by the expertise at the Bank of North Dakota. They're a neutral site. They're a neutral arbiter of all of the other financial institutions with all of the diversities. It provides such an incredible leadership model for our banks. I don't know a single banker in North Dakota, private, small, large, corporate, giant, whatever, who doesn't appreciate the Bank of North Dakota. But I really give a lot of the credit for that to two things: our culture, and then the people that culture has provided in leadership. And I'm not just saying John Hoven. John Hoven was the bank president when I was the economic development and finance director in North Dakota. We worked closely together on deals. So it's Eric Hardmeyer ever since John left the bank to run for governor, and people before him, Republicans and Democrats before them. It's a great model, but it requires really diligent leadership who works with the banks and doesn't become a competitor of the private sector. And that's the model. And whether it can work in other places, I don't know. Like I said, listen, any policy can work if we just turn it all over to North Dakotans. And if we just spread them out, I would say we'd have the world's greatest federal government if we just turned it over to the North Dakota legislature.
All right, Senator, we're getting down towards about 10 more minutes left here. So I think one of the things that when we have our bankers seminar is that we definitely want to provide some takeaways for our community bankers. And so I want you to put yourself in the conference room with one of your community bankers and speak to all of them today and tell them, what do you really want them to do over the next year? You mentioned that you really need community bankers and their support. What's your message to our audience today as to what they need to be doing over the next year?
Yeah, well, that is great. Thanks for that. Because I do talk to the community bankers a lot. I listen to them a lot. A couple of things I would say. One right away I would say is stay really close to me. North Dakotans are used to hearing me say that, but this is our advantage. You talk about the genius of the founders. Giving every state 2 senators, this is what allows small states, small population states, the ability to punch above their weight class because we literally know everybody. And so I have the advantage, the added blessing of knowing all my constituents, and they have the opportunity to influence the affairs on the banking committee, for example, in the case of the community banks in North Dakota, in a way that Elizabeth Warren, let's face it, she's a very prominent member of the banking committee, but she doesn't get to talk to every banker in Massachusetts. Kamala Harris doesn't get to talk to every Californian or Ted Cruz to every Texan or Marco Rubio to every Floridian. I get to. And so stay close to me and stay in touch with me. The biggest thing that I'm always looking for is, first of all, tell me what we can do to make things better, but also tell me what to block that are making things worse. I think for now, we're going to be in this zone for a couple of years. If let's just play this out a little bit. If Joe Biden becomes president and Mitch McConnell remains Senate Majority Leader, we're going to be in a defensive mode. That's not a horrible place to be when things are pretty good. Back to the corporate rate. It won't go up. We're not going to be able to bring it down, but it won't go up. And so same is true of banking regulations, laws, but it's really important to stay in touch with me. The other thing I'd say is keep me really well informed with what the regulators are doing and saying. If we do a TDR reform, for example, maybe you want it, maybe you don't, maybe the auditors and the accountants don't like it. But we want to reinstate or at least strengthen the community bank relationship with their borrowers. And a lot of times these regulations get in the way of that. We need good examples, good anecdotes, good illustrations. That's why we like to have our people come to the banking committee and share those, because many of the attempts by more liberal members who want to attack lenders because they kind of put them all in the same bucket, we like to show them the examples of the community lender and the community borrower in a way that says, hey, maybe this doesn't apply to them. Maybe this shouldn't apply to them. And so communicate. And we want to make it easier for you to make that tough loan. The other thing I'm trying to do is I want to make sure that the solid borrowers, people that were solid before the pandemic, but now are iffy, that they maintain their standing pre-pandemic, that they shouldn't be punished for something that they had nothing to do with, that they responded in many cases to what the government was telling them to do. Now those get into a little wonkier issues, but just help me be able to communicate that back to Washington and then make the policy decisions and changes that facilitate that relationship.
So maybe the last question before we wrap it up, Senator, maybe just more of a general question. So now you've been in the Senate for 2 years, previously served in the House of Representatives, especially in 2020. So you went through the impeachment trial and the pandemic, and just overall, just maybe you could tell us a little bit about is the Senate as you got into the race, is it what you thought it was going to be? What's maybe a little bit different than your experience over on the House side? You're one of 435. Now you're one of 100. Just we've got you here.
Sure.
Maybe just a little bit of that experience.
Yeah, I suppose it's too late to get out of it. The biggest difference really manifests itself last week when I got to vote for Amy Coney Barrett to be on the Supreme Court, and then went to the White House for the swearing-in ceremony. That advise and consent authority of the United States Senate is vastly different. Now, when you're the only member of the House of Representatives from a state, but you're one of two senators, there is a little bit different view, particularly from the constituent standpoint. But I'll tell you the story. So when the president tried to talk me into this job, and he first came to me, he called and I said, I don't know, I'm not that interested. And then he wanted to talk some more. And then I played hard to get, and I meant it. I liked my job in the House. I liked the people. I liked the action over there. It was a little lonely being the only member, but from the entire state, but I always knew if I could get South Dakota and Montana and Wyoming and Alaska together, there were 5 of us, then there was only 430 others. But I liked it. And I really was comfortable. And of course, there's a lot of risk. This is my career. I don't have any wealth. But the president said, when he called me one day, he said, okay, we need you. I got to have you. Can I call Chris? Would you give me Chris's cell number? Would it be okay if I called her? I said, you can call her. Of course you can call her. But just so you know, she's tough. So then he said, Chris is my wife. So then he goes, let's just bring her to the Oval Office. I can talk anybody into anything in the Oval. Just get her to the Oval. I know then it'll be easy. I'm like, you have not met Chris. Okay. So on January 2nd of 2018, Chris and our son Abel and I went to the Oval Office. No one else was in the whole Capitol or in the White House hardly, because it was the day after New Year's. He just got back from Mar-a-Lago. I'll spare you all the details. It was really a very funny meeting. But the first thing he said to me as we sat there is he said, Kevin, do you know what the 3 most exclusive clubs in the world are? I said, no. The United States Supreme Court, the NFL owners, and the United States Senate. The United States Senate is very powerful. Senators are very powerful. And I said, sir, that's the part I don't like about them. I said, their power is derived from their ability to obstruct. And then he told me a very funny story about a senator. You thought, okay, we're never going to come back to this topic. And then pretty soon, like a laser beam, he turns back and he said, but it's still power. And I still said no that after that meeting. He told me that thing about the 3 most exclusive clubs 3 more times, trying to convince me in the next couple of months. And finally I said, could you get me an NFL club? Because that's the one I want to belong to. But anyway, when I got into it, the thing I've learned is senators have a lot of power. Getting back to my Amy Coney Barrett thing, the ability, the power to advise and consent the administration, not just on judges and justices of the Supreme Court, but on cabinet secretaries, undersecretaries, deputy undersecretaries, every general that wants a 3rd or 4th star. All of that, one senator can hold up, and often does. And that's how you wield authority respectfully, and authority is derived from your political capital. And you guys, one of the things that a lot of members don't do very well, in my view, is they don't use political capital very effectively. They use it all up every day. And that's, again, the founders, that's why they created the diversity of our system. That's why they created the People's House. I always tell student groups, if you want to see a glimpse of America, go sit in the House of Representatives when they vote. Now they vote by proxy now, weird as that is, but when all 435 of them are in there, and you'll look down and you'll see 435 people who look just like, each one of them looks just like 700,000 others in this country. And it's one of the richest experiments and experiences you'll ever see. The Senate, of course, that stable body that's where each member is given this equal power, every state's given this equal power. It's still better to influence. You need to get 60 votes for just about anything to get done out of 100. You can't burn many bridges. If you burn one forever, you can't walk across. It's a lot harder to get 59 more friends. And so the richness of that experience, I think is the biggest difference is you have a lot more political capital. You have a lot more power, not just influence, but you can, if you use that power in a way that on the things that matter the most. When I extended the Export-Import Bank, 7-year extension, longest extension in the history of that bank, it cost me a little bit. But I also knew the system. I'd learned the system in ways that others who were much older than me in the Senate hadn't, because they were used to a different system, an older system of what's called regular order. So I think the biggest difference is just so much more power. And the president and others return your phone calls much easier.
All right. Well, hey, I guess I have to apologize for calling you a Packers fan. I had one of your staffers, who happens to be my son, text me and say that you're not a Packers fan. So I would never want to put that on anybody that they're a Packers fan if that's not, well, if you're truly not a Packers fan. So we'll get that one settled down.
Drew would know. Although as I like to say, Brett Favre was the best quarterback the Vikings ever had, and he knows how to pick presidential candidates.
Well, Senator, on behalf of Eide Bailly and the firm, I just want to tell you, thank you for taking the time today. I know you're busy. We appreciate you spending time with our community bankers, and also for your leadership on the committee, on the banking committee. Thank you so much for what you do. We really do appreciate it. It's
my pleasure. Thanks for the opportunity as always. And thanks for what you guys do. I mean, Eide Bailly is such an incredible company and such a great example of North Dakota innovation and entrepreneurial spirit, and then being able to spread all that talent and whatnot across the country. It's a real gift. So thanks for what you do for us as well.
Thank you, sir. We appreciate it. Thanks for your time. Have a great day.
You too. Bye-bye.
Bye now.